What is up, YouTube? This is Map to Success, your boy Ace Crypto here. It is currently December 28th, 2017, and I have some very informative news to share with you guys in the crypto world community. Basically, to sum it up in one word, we're getting taxed. And it's definitely not a good look. It don't sound good at all. Because a lot of people are just so furious right now. It's going into the end of the year. The new year is right around the corner. Actually, it's next Monday. And a lot of people are getting hit with some hefty taxes because it's been a pretty successful year for a lot of people in cryptocurrency. So, let's have a look at what's going on with Uncle Sam. So basically, they have this tax exemption that they have on Bitcoin transactions below $600, or so they claim. So they claim that anything that's below $600, that's actually before the end of this year, that would actually be exempt from paying taxes on. So basically they're saying the measure, if passed, would create a de minimis exception for cryptocurrency payments below $600 after December 31st of this year. Put more simply, transactions involving a cryptocurrency below that threshold would trigger a capital gains liability. So they basically they're trying, or so they say, they're trying to actually exempt. So if you're doing a big transaction like over $600, they're telling you that you're going to have to pay tax on that. A lot of people aren't really thrilled with that right now. They really don't want to hear anything like that, because the whole point of having a decentralized currency is basically not being controlled by anything. You're basically trading peer-to-peer. Now, the IRS is basically coming into this, and they're actually telling you that because you're trading peer-to-peer now, and it's dubbed as a valuable asset, they're now looking at it as property gain, which cryptocurrency in itself is one of the most intangible currency or piece of property that you could own anywhere. It's more intangible than you think. Trust me. Because all it is just a binary, letters and numbers combined, and a whole lot of combinations. So it's not like physical money that you could actually hold in your hands. So it's not like a house or a car or something, physical asset. It's basically, according to them, it's imaginary figures. So if it's imaginary figures, why are we getting taxed on it? Just, they don't want to hear that. It's just another way of them actually making more money, and that's 100% proof to show that cryptocurrency is here to stay. Guys, this is the future of money, and they realize that. That's why they're trying to tax as much as they can. If this was a scam like they claimed that it was before, they were telling people, oh, don't put money in a cryptocurrency, it's a big scam, they're going to run away with your money, and they're going to do this and they're going to do that. Why are they putting a tax on it now if it was a scam? That just simply shows that it's not going anywhere anytime soon. And this is most definitely, in my opinion, I think this is the future of money. This is gonna overtake As a matter of fact, this is going to replace the original fiat currency in the future. That's what I think. And I know a lot more of you guys out there in crypto land think the same thing. I'm pretty sure that's going to happen. Might not be 2018, might not even be 2019, but it's somewhere coming up in the very next, I would say 5 to 10 years maybe. It's getting there, slowly but surely. And they actually have this bill that they passed. Let me show you guys exactly what they're saying here. So it's from the 115th Congress, first session. It says right here to amend the Internal Revenue Code of 1986 to exclude from gross income de minimis gains from certain sales or exchanges of virtual currency and for other purposes in the House of Representatives. So they said the bill to amend the Internal Revenue Code of 1986 to exclude from gross income and de minimis gains from certain sales or exchanges of virtual currency and for other purposes. 1. Be it enacted by the Senate and the House of Representatives of the United States of America and Congress assembled. It says 3. Section 1. Virtual currency. And it said 4. In general, Part 3 of Chapter B, Chapter 1 of Internal Revenue Code of 1986 is amended by inserting after Section 139F of the following section. And it goes on and on and on and on. But you guys could check this article out by yourselves. This is actually on this is actually on CoinDesk. So it's CoinDesk.com. They actually have the full order. They have the full order of the bill, a full article you could read, go through, see what they're saying. But basically, to summarize it, they're trying to screw us over. That's what they're trying to do. And the more they get into our pockets is the more they try to control everything. So more than likely, there's going to be a tax penalty that we're going to have to pay for trading bitcoins and other currencies that we would normally trade on a day-to-day basis back and forth. So say for instance you want to trade Bitcoin to Ethereum because you see a gain and a profit that's going on somewhere. You could get somewhere between a 6 to 8% gain. You could go over and you could exchange that. You could get that gain, but at the end of the day, you're getting taxed on that. If you change from Ethereum and you buy Litecoin with it, you change back from Litecoin and, say for instance you buy, you go all the way back full circle, you come back to Bitcoin. You're getting taxed 3 times. If you make 4 transactions, you're getting taxed 4 times. That's ridiculous. A lot of people are doing an unlimited amount of trades per day. And a lot of people aren't really prepared to go through this kind of headache, try to figure out what you did and what you didn't do, because you're trying to hurry up and get as much traded as possible to make as much profit on that day as possible. There's no way in the world you're going to actually remember all of that. That's too much. But tell me what you guys think about this. Hit the comment sections up. Tell me what you think. If you think this was informative enough, if you learned something from it, please like, share. Don't forget to subscribe. Smash that like button. We're actually we're headed into the new year. Let's just hope and pray that everything works out for the best, and we'll keep making money, and we'll just keep riding it out, guys. Just hang in there. Hold your bitcoins. Let the value go up. Do what you have to. My thing is, and I always look at it like this: if you're doing an active investment, I'm not sure how they're going to put it. Like if you're actually trying to hold, and if you're doing like long-term investments, I think, because I was hearing something about that earlier today, I think it was something like they're going to try to tax you every year, but the tax is going to be less if you do long-term investments. Other than doing short-term investment, just pump and dump, you're going to pay a lot more in taxes. More than likely, you're gonna get screwed in doing a short-term investment. If you're just trying to get quick money and just run, you're gonna be paying a larger sum, definitely a larger fee. So you need to take that in consideration too. So there's a lot to take in, but just do what you have to stay on top of the game, because you know there's always something that comes around to try to break our spirits, but we're definitely not going to let that happen, not this time around. So this is Ace Crypto coming up. Map to Success. Give me a shout out. Let me know exactly what you think about the video. Let me know what I need to improve on. Just give me some words of encouragement. Let me know exactly what's going on so I know if I'm doing something right or if I'm doing it wrong. Okay? So this is Map to Success again. It's X marks the spot. Let's get there. We're going to get it together. Peace.